Hi everyone, this is the lecture 23 of the 2026 FOREX Trading Empire Mentorship Program. Now, in this program, I will be doing the market review. Now, I'm going to focus the market review on the dollar index because I haven't been, I can say, that steadily online for a while. And if you guys have noticed, due to the schedule that we have been using in the lectures. When I've been uploading the lectures, I have been delaying the lectures a little bit, and I've missed quite some days when I haven't even posted anything or any update on the Telegram group. I just have some personal things going on. But without boring you guys out, this is just going to be a little lecture to explain what I've been going on if you're kind of lost in price and to help you to understand what I'm actually looking at in price, what is going to be my bias going in, not only this week, what is the whole idea going in, I can say the whole month or even throughout this year. I can give you guys a broader idea to that part, but just to give you guys a clear view of what I'm personally looking at in price. And we're going to be doing that on the dollar index. I just want to keep it a little bit simple because I told you guys the focus is on the dollar index. Understand the bias of the dollar index, you can easily apply that bias to the major currency which is being traded in these lectures on the 2025 mentorship program. So I'm on the weekly time frame of the dollar index. Now I know I am from the last lecture when I did a market review and I told you guys what I was anticipating when I explained on there might be a possible continuation and I'm looking at the only drawn liquidity is the previous week high, which price did not run the previous week high, it did retracement, leading to price forming a swing high. Now we have a swing low and we have a swing high. This makes it an uptrend. After taking out sell side liquidity, after price took out sell side liquidity, look at this high, shift in structure, leading to an uptrend. So whatever bias you have on the dollar index on a weekly time frame, it should work on the principle of the idea that price is in an uptrend. There's no other way to put this than to stick with the structure in price. With the structure in price is indicating an uptrend. After you run the sell side liquidity, did a shift in structure from the swing high. Now we have a swing low and we have a swing high. With this idea, now we can build up our trade idea because now we understand the structure. So from the swing low to the swing high, the point of interest which you'll be looking at price to use as a support should be a fair value gap and order block in price leading to a continuation in running out swing high if it's going to lead to a continuation in price. It's a very easy to go trade if you understand, which I've talked about it a lot. I've talked about the trade idea. Now I'm going to mark out the major points of interest, but at the same time, I will talk about points of interest you should have your eye on. So first we have the weekly fair value gap. Same time we have another block. Now, this is a proportional block from this other block. You can just include both this candle and this candle. Include both candle as the other block because price fell in trading lower from this week after expecting the fair value gap. Failed in trading lower, did an internal shift. Here is the other block. But there was a week the price closed as a down close candle, which led to the support in price expanding higher. If we were to look at the candle closely, you can see that this candle was supporting from the idea of this candle holding price leading to an internal shift trading higher to run the buy side liquidity. So we're going to include this candle as another block. So this candle is going to represent this block. Remember, the candle is filling off this candle. So looking at this point of interest, if we're to place our fib from the swing low to the swing high, the weekly fair value gap is close to the mid-range. The other block is below the mid-range. So it's a valid point of interest to anticipate a reversal on lower time frame in price trading higher to run the swing high, which on the weekly time frame is a trend continuation. Now, at the same time, look at this inversion weekly fair value gap. Now, looking at this inversion weekly fair value gap, you can see that the points of interest that I pointed out are within the range of the inversion fair value gap. When price trades to the inversion weekly fair value gap, pay attention to the daily time frame. If there isn't any shift on the daily time frame after the retracement to the weekly inversion fair value gap before price trades to the weekly fair value gap, then you can still anticipate lower prices to trade to the weekly fair value gap. But if price were to trade to the weekly inversion fair value gap and there is a shift in structure on the daily time frame, then you can still anticipate a continuation trading higher around the swing high. Now, without be classified as a high probability setup, I will say no because look at the idea. The idea is that price already used the weekly inversion fair value gap once. You can see trading higher. Throughout this week, after retracement to the inversion fair value gap, price used it as a support in trading higher. But that doesn't make it an invalid weekly inversion fair value gap. No. Price can use a fair value gap multiple times. You just need to have an idea whenever price trades to that fair value gap, have a plan. So how you want to see price react when it trades to the fair value gap or an inversion fair value gap. So the idea is that if there's going to be a shift in structure on the daily time frame, before price retraces to the weekly fair value gap, as soon as price trades to the weekly inversion fair value gap, is a great idea to anticipate higher prices. Now, is it a high probability? No, a high probability is to trade deep into the weekly fair value gap. But with the way price has been trading recently due to the current issue going on between the US and Iran, so there's a lot of volatility in price due to geopolitical news. So it might affect price. So you need to be very vigilant about points of interest like this. Price might use it even before trading to your main point of interest. Now, knowing that you have a clear perspective on where you are anticipating price and your draw on liquidity is for price to run the buy side liquidity. A continuation for price to run the buy side liquidity. This is our weekly draw on liquidity. Now, going in this week, currently in price, I'm actually anticipating a counter trend. I'm anticipating a counter trend in price trading lower to the weekly fair value gap. Because if we were to wait for a week to retrace, this might take at least, I can say 1 to 2 weeks, depending on how price is going to trade on an individual week. But it might take a while before a retracement. And I'm trying to look for those intraday setups at the same time, even if I do like to take swing trades and weekly expansion. I do look for those intraday setup, which I've talked about, that I pay attention to intraday setups and I have to have an idea on what I'm actually looking at going in on those lower time frame. So the idea this week is that if there's going to be a continuation or a shift in structure from the daily time frame in price trading lower, draw on liquidity should be the weekly fair value gap. That have been my idea going in this week. Looking at it from the daily time frame, currently Price just filled in the daily fair value gap. So it's a daily fair value gap. Price just filled in this daily fair value gap. And if there's going to be a continuation trading lower, I'm still looking at this other block. So I can tell you guys that I have a clear daily bias of anticipating lower prices. Now, in price going below the other block mid range, it's quite close to the weekly fair value gap. So my hands have been tied on a weekly expansion trade level. I'm only using the 4 hour time frame to look for intraday setup currently on the dollar index. I'm not trying to go full position into the current trade idea. I need to see a clean alignment between the weekly and the daily before actually going in with a full position size or even try to take any aggressive setups. But I'm telling you guys that this is one of the parts you need to be patient of. Price might support from the other block. Even if price already traded through the daily fair value gap, there is still a chance in price supporting from the other block in trading higher. So I'm taking that in account. If I'm going to take any setup, it's going to be a 4 hour short-term trade. A 4 hour short-term trade, which means time frames I'll be using will be the 4 hour, the 1 hour, and I'll be looking at the 15 minutes and the 5 minutes for my entry, but mostly the 5 minutes for my entries, which I've talked about the specific trade idea to that in a daily trade setup, the daily trade plan. Sticking to those time frame will give me a plain edge in being patient in waiting for the weekly and the daily bias to be in line in what I'm anticipating in price. I'm only looking at those time frames to get involved in current price. Now, that doesn't mean I'm going fully aggressive in price action. I'm actually being patient in waiting for those right times to actually take a trade. So on the 4 hour, after the run on the daily fair value gap, you can see there's still a trend trading lower after the shift trading to the daily fair value gap retracement. Respected the other block, traded lower, took out the swing low. Currently, price actually at the 4 hour fair value gap, which I've been looking at the price action for a while. I've been looking at this price action for a while from the daily time frame, and I've been looking at this all morning, looking for those cutting edge area to use for my entry on how price will be trading lower to run the sell side liquidity. Now remember, this is not a high probability setup. This is just me trying to have something to win. So that's the reason I need to stick to what the 1 hour time frame is doing. If it's aligned with the 4 hour, those are the times I'm actually going to be taking the trade setup from this whole idea, which might be wrong, and we might see a continuation in price trading higher, which I've explained why I'm not looking at the 1 hour expansion or a weekly expansion in trading lower to the weekly fair value gap. I'm just looking at the 4 hour short-term trade before actually taking any setup. Now on the Telegram group, I've been inactive, but due to the last assignment I gave, or you can say a little work I gave for you guys to go through, most of you didn't actually turn up to what I told you guys to do. And the rest, the others that did actually posted about what I asked them to do, sent it directly to my DM. You guys DM me directly, so I answered most of the questions. Some I left it unanswered. I wanted that into trading for a while. Had other things doing, but I want you guys to try to keep the group active going in because I will be back. I'm just a little bit. I think this is going to be the last week or next week. I'm not that sure. But when I'm fully back, I will be going into live trading a lot, trying to help you guys trading live, mostly day trading, using the trade plan that I've explained. That was the whole build up in teaching you guys the trade plan going in the 2026 mentorship program. We're going to spend more time into live trading. So during those live trading sections, I want you guys to pay attention to how the lecture is going to be delivered. Take notes and learn from it. And if you have any question, you're free to ask whatever question you have. If you have any question, you can ask once I begin the live lessons. But I've explained on my whole idea on the dollar index so you guys to have clear perspective on what I'm actually looking at in price. What is the drawn liquidity that I'm looking at in price trading too? And why I'm currently being patient, not going much aggressive into taking any setup is because the alignment between the weekly and the daily is not that aligned from my own personal perspective. I'm actually anticipating a counter trend on the weekly time frame. And on the daily time frame, there's a possibility of a trend continuation in rolling out the buy side liquidity, which is the swing high. So there's a possibility in price respecting the other block and trading higher to run the buy side liquidity. So I'm trying to be patient to wait for the alignment. So once there's an alignment between both time frame, those are the times I'll go into more trades, take on aggressive trades in anticipating a continuation, trading higher to run the buy side liquidity. But the drawn liquidity is still the same. It's just the timing between both time frames is not fully aligned. That's the whole reason. So make sure you guys go through your charts, focus on those times, and be patient to wait for the alignment before actually taking any aggressive trade. Mostly if you're a complete beginner, you don't have much of an experience day trading. You can practice on the day trading side of things, but taking aggressive trade or actually risking your money, I wouldn't advise on that. So on the 4 hour time frame, the buyers is to see a continuation around the sell side liquidity. But looking at this time frame, the reason I'm not actually taking any setup is because here's another block. Here's a 1 hour other block. There's an internal shift, a trade lower, swing high, swing low, internal shift leading to an uptrend. There's a possibility in price we're expecting the 1 hour order block in a trend continuation to run a swing high. So the only reason for me to take a sell, going for the sell side liquidity, is when price is below the zero point 0.5 level. As long as price is still above the zero point 0.5 level, and there's a possibility in price trading higher to run the swing high, I'm not actually anticipating higher prices. Or I'm not actually anticipating lower prices. I'm personally going to be waiting for those right connection in price before actually looking for the setup. So I think we're just currently getting to 8 a.m. Eastern Standard Time, so close to 8:30. So let's see if we have any high impact news today. Let's go to Forex Factory. Do we have any high impact news today? So today's Tuesday. We have one at 9:45. We have flash manufacturing PMI. We have PMI news. And 8:30 p.m. we have CPI. So it's actually midnight and is an Australian dollar. So we do have news today, but it's at 9:45. I think it's close to the New York Q zone, the closing time of the New York Q zone, which is 10 a.m. and this is 9:45. Just make sure you pay attention to if you have to hold any trade during this time. Just we advise not holding any trade close to 9:45 or close the trade before 9:45 and wait for the first 5 minutes before actually taking any setup. Let's look at the 15 minutes and how prices were expecting the other block. Shifts in structure. Swing low, took at the high. Looking at this 15 minutes, you see there's a possibility in this trend. Currently, the price is still in an uptrend, even after the run on this swing low. It's still an uptrend, which might lead to a continuation trading higher. So, spend your time looking at this time frame. Now, I'm not sure if I'm going to spend more time in this live. I just wanted to be a brief explanation to explain what is currently going on in price and what is my trade idea. Because there was a lot of questions and personal DMs that was sent to me that what is my current perspective in price. So I just came to give you guys my personal perspective so that you know what I'm actually looking at in price in case you're confused on what is the current bias using the specific trade plan which is being taught on the 2026 mentorship program, which I've explained to you guys. If I'm going to be looking for any setup on the day trading perspective, I explained that I'm going to be using the 4 hour perspective in price. What is most likely to happen on the 4 hour time frame? That's going to be the idea going in. Now, I'm going to talk about one other currency, and I'm not going to go into popular currency like gold or oil because that have been the most popular currency recently due to the war. But I'm going to talk about USD JPY. Now, the price action on USD JPY have been really tempting because I've been going through the charts, looking at how price have been delivering on that currency. Now, it's not quite similar to the dollar index, but there's still the correlation between both currency is still intact. Whenever the dollar is ready to expand higher or lower, it still reacts with the JPY pair, still reacts with USD JPY. But the USD JPY weekly charts have been really convincing to the bias it has been indicating for a while. Now, looking at this chart, you can see here's the recent swing low and here's the recent swing high. If there's going to be any continuation in this price action after around the swing high, the next draw on liquidity should be the swing high. Now, we do have a fair value gap, a weekly fair value gap, which price might fill in the weekly fair value gap, which is this fair value gap. Price above the mid-range of the weekly fair value gap and filling in the weekly fair value gap. But I'm going to move it aside because looking at the price, what I'm actually pointing out is the counter trend trading lower. First, there was a retracement to the weekly order block last week. Here's the retracement to the weekly order block. And looking at this price action, the most possible outcome you will be anticipating is a continuation, trading higher to at least fill in the weekly fair value gap. That should be your first conclusion in price retracing to the other block. We're expecting it seeing the week in price. But at the same time, I'm still looking at the dollar index. The idea that there might be a possible retracement on the dollar index. Remember, the possible counter trend on the dollar index is not a high probability setup. So whenever you're journaling trades like that, you should indicate that it's a counter trend. And we all know that counter trend are not high probability setup. Sometimes we even need to have a time frame to verify the trend more closer before actually taking the setup. So on the weekly time frame, got me to a little confusion between which buy should I stick to, the idea in price respecting the other block trading higher, or the idea of the dollar index retracing lower. That was the reason I wanted to bring up this currency because there's going to be times like this where there's going to be a correlation between both currency that is going to get you to a point of a confusion, and you need to look at the basis of whatever time frame you're trading to understand how to have a clear perspective, which I talked I stick to the idea that I'm going to stick to the dollar index trend, but at the same time, I'm going to pay attention to how the daily is going to be trading. Now, first, this is how I got to my conclusion. First, looking at this daily time frame, here's the other block. If price were to trade higher to run this swing high, price should have stayed above the mid-range of the other block. Now this is part of my plan. It's not a compulsory in price. It's just part of my trade plan. First, price traded through the daily fair value gap. After the trade through the daily fair value gap, traded below the zero point 0.5 level of the other block. Makes it a high probability continuation to the weekly fair value gap. That was the reason I wanted to bring it up. And at the same time, I'm looking at this other block as a resistance area in price trading lower. So that got me to the idea of looking at the 4 hour and the 1 hour time frame. Now, when I was staring at price last week, which yesterday price did this downtrend. When I was looking at this price action coming close and running at the swing high, I wasn't sure about the idea in price retracing lower. But looking at this dumping price, looking at how price traded lower, traded back to the other block, and looking at this fair value gap, look at it from a 4 hour perspective, the fair value gap from a 4 hour perspective, the trend is still in a downtrend. An internal shift 4 hour fair value gap, draw on liquidity for a possible resistance. The 4 hour fair value gap should have as a resistance in anticipating lower prices to run out the swing low. Now, this is my idea currently on the USD JPY. So it's correlated with the dollar index in anticipating lower prices. So that's the reason I told you guys there's a unique price action on USD JPY that I wanted to bring up. Because looking at this price action, I have it's not a strong probability, but I can say it's enough for me to take it as a good trade in anticipating lower prices to the weekly fair value gap. Now, the short-term target should be the swing low, and a complete retracement to the weekly fair value gap. So make sure you do your own personal study on this. Do your own personal study, have your own personal trade idea, depending on what I explain that I'm actually looking at. Do your own personal study on what you're actually anticipating in price and look at how price will be trading to it. Let's look at the JPY pair. If it's gold, let's look at JPY pair. Now, from the JPY pair, from the weekly time frame, they are correlated in a counter trend trading higher. A run on a sell side price formed a swing low. Clearly, you can see the swing low. There's a swing low, a retracement. So the weekly fair value gap. Now, I told you guys about the JPY index. That if you're to trade the USD JPY, pay attention to the JPY index. Now you can see the reason why. You can see the correlation. So pay attention to the daily time frame. When you move to the daily time frame, you can see internal shifts. There might be a possible continuation trading higher. I'm just trying to give you guys the broad explanation, but I need to see a dollar confirmation before actually taking any setup. And the draw on liquidity should be the high. Should be this high, should be the draw on liquidity. So there's going to be any continuation in price trading higher on the JPY index, then I will be anticipating a possible counter trend to run the swing high. So let's move back to the dollar index. So back to dollar index, Euro USD. So going in, I think maybe 2 weeks in, I've explained my trade idea. Let's see how price will be trading to that trade idea, which currently in a day trading setup is to see the 1 hour align with the idea in price running out the sell side liquidity, which I'm not sure is going to be a setup today for me to even take advantage of, which I'm not actually that active in trading. But if there's going to be any setup, it should be when the when the 1 hour is aligned with the 4 hour perspective, which I told you guys might be a possible continuation in running up the swing high. And it is going to be any possible continuation. The time frame for you to look at should be the 15 minutes, and the 1 minute should be the time frame you should be looking at for an entry. Which this might lead to a continuation from the other block, respecting it here. Might lead to a continuation, but I'm not going to go into more into day trading. Once you get to the day trading section, I'm going to show you guys a lot of tricks in looking for scalping setups and at the same time take those good day trading trades with a clear trade idea so that you guys understand more on what I'm actually talking about in the 2026 mentorship program. Now, there's a baseline to whatever trading style I'm actually trading. I'm going to explain the whole basis around the trade plan and why I can switch the time frame easily and still have a clear and a high winning rate in whatever time frame I'm actually using. So all will be explained going in because there's going to be a lot of live trading section. I think once I'm done with what I'm actually doing currently now, it's going to be a lot of live trading section just like this. And this will help you in understanding how to day trade and how to day trade even on the 1 minute. I will try to go as low as the 1 minute, but at the same time, trading the 1 minute with a high spread brokerage account wouldn't be advisable. So that's the reason I normally keep it at the 5 minutes. But I will show you guys how to go lower to the 1 minute to look for your setup. But that is it for this lecture. See you guys in the next lecture.